Yeah, and so markets officially opening right now just slightly mixed. The Dow lower, the S&P 500 lower, the Nasdaq just fractionally higher, but a lot of pullback on tariffs. We've seen just more broadly since the Liberation Day, started. These tariffs were imposed. You've got the S&P 500 down by about 13% in just 1 week. The Dow down by about 12%, and the Nasdaq down about 14%. The Nasdaq, though, in bear market territory. That means 20% off of the high that we saw just last December, Marni.
Alicia, what does this mean for 401ks and retirement plans right now as we watch kind of the fluctuation of the market?
Yeah, I mean, from Wall Street to Main Street, right? I mean, the two are so interconnected. The stock market's tied to so many people's 401ks, their pension plans and retirements, and we've lost some $7 trillion, adding to those losses right now as the markets are open. And that's all come from millions of people's retirement plans. And so you have those who have a long-term horizon probably going to be okay because historically the markets bounce back. But if you're someone who was going to retire this year, you're planning on doing that, or next year, you're probably either now having to look at potentially delaying that retirement. That's something that a lot of economists are talking about, or you're looking to retire with a completely different lifestyle than you may have thought you were going to retire. Something that's even more interesting to me is some data that came out over the last 24 hours from a company called Empower. It's a retirement services and wealth management company. It's actually seeing people start to dip into their retirement on hardship withdrawals. That's ticking up about 15 to 20% to them, based on historical norms. That's significant because it's showing the pressure that the consumer and the average person is under. Either these are people who were laid off, people who are just feeling the inflationary pinch. They're having to pull from their retirement at a time when 401ks and pensions are pulling back significantly from the stock market. This is what continues to fan the flames on Wall Street about potential recession fears and the damage these tariffs are doing, Marni.
Right. And then when you watch those accounts slide, Alicia, that has a direct correlation with consumer confidence and how people feel about buying things,
Yes.
Particularly high ticket items. What are some of the experts saying about the impact on that factor?
Yeah, I mean, the reality is consumer spending is going to pull back. You've had the likes of Jamie Dimon, Bill Ackman, who has been a Trump ally, saying people are going to start pulling their purse strings. You have Larry Fink. He's the CEO of BlackRock. He has come out and said that we are probably right now in a recession, seeing people kind of pull back. And I say that, and Larry Fink says that, because typically with a recession, you don't know you're in one until about 6 months in, because a recession is 2 contracting quarters or negative quarters of GDP. And so it's very likely we are seeing people do that already. And then in the next 6 months, we'll find out for sure if that's the case. But these are the brightest minds on Wall Street's warning that that is what we're probably seeing right now. And if not now, very, very soon if these tariffs remain in place, Marni.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.